Welcome to another episode of Dr. Brook on the Block. It's time to grab a seat, buckle up, and take a ride with me through the wild, wild west of the Web3 universe, where we're going to learn all about coins and tokens, NFTs and contracts, digital real estate and the metaverse, and so much more. There's a lot to get through on the block, but I am here to pave the way and help you avoid those nasty pitfalls and rug pulls so you don't get hurt. I'm going to also introduce you to some interesting characters along the way. Are you ready? Your ride starts now. Hey, Dr. Brook here with another epic adventure through the wild, wild west of Web3. I am joined by my co-pilot, Claudia Moncarz, who is the founder of Moncarz Law Firm that focuses the practice on helping people get out of trouble with the IRS. This is a topic we have not spoken about on the show, so I'm very excited she's here. Her team and her have negotiated with the IRS to reduce over $3 million in taxes and penalties on behalf of their clients. She is also a frequent speaker at seminars on topics including tax planning, representation in front of the IRS, and doing business in the US. She has been named a rising star by the super lawyers and is an AV preeminent rated Martindale hubble, which is the highest rating available for lawyers. She's also served as an adjunct tax professor at Concord University Law School and taught income taxation and corporate taxation. She is also fluent in Spanish. Welcome to the show, Claudia. So excited you're here today.
Thank you, Dr. Brook. I appreciate giving me the time to talk to you and to your listeners and give some of my geeky tax. I admit I'm a tax geek, so give some of my knowledge to your listeners.
Absolutely. It's going to be a fun one. Like I said in the intro, we haven't spoken about this topic before, and you are well distinguished when it comes to tax law and understanding. And with cryptocurrency being such a brand new thing, kind of brand new thing, right? I mean, it's only been
for the
around
IRS.
Yeah. Brand new thing for the IRS. And it's been around, less than 2 decades. And so there's still a lot of murkiness to be navigated through. And people like you are what help people like me and other investors in the space do this the proper way. But before we get into that, my listeners know that the first question I always ask my co-pilots on the show is, what is your intro story into Web3? How did you hear about this crazy digital currency space?
Actually, it was my cousin. He's into trading and finances, so he started telling me about this, and I got interested and then when little by little listening to the news and all that, and it's interesting. And then I started seeing how the IRS was looking at it, so that always got me interested in the spin that they put on it.
Right. Oh my gosh. Well, they definitely, like to make sure that they get their lion's cut share of everything. So they, are going to make sure that people aren't just going to be running off with their crypto millions, right? Without them taking a piece of the pie. So tell us, from your perspective as a tax attorney, how are the crypto tax laws different than the average tax laws that people normally know, right? Like that you pay your W-2 taxes on your tax rate, all of those things. How does the crypto stuff differ?
Sorry. Actually, I don't think there is much difference in how there is, but it's more of how the average person sees it. I think that's where the difference and the disconnect comes, right? Because when you think about crypto, you think about currency and like cash, and you to the average person, and even to myself, before I learn more about it, I would just think it's just the equivalent of cash, like a dollar bill, right?
Mm-hmm.
But the IRS doesn't see it like that way. And for tax purposes, they don't treat it that way. And as a matter of fact, they call it a digital asset. They don't even call it digital currency, which that's a new change that they have for this year.
Mm-hmm.
So they basically see it as equivalent to a stock. Like if you have a stock, you have Amazon stock and you sell it, then you have to pay for that gain, right? You pay taxes on that gain. It's the same thing with crypto, but it even goes a little bit step further, because if you go from one type of token to another, that is a taxable event that you have to pay. That triggers a tax, and most people don't think about it. Or when you use a coin to then purchase a product, they don't necessarily think that that is a tax, because that triggers a tax, because I'm just buying something. It's like I'm using cash, a form of cash, to buy, I don't know, a book, a course, whatever it is, and they don't think about it. So I think that's where the difference is. Tax law is not different per se. It's more of how the average person thinks about it. And that's why I appreciate you coming here, because I think knowledge is power. And the knowledge, we have power, and we can plan, and we can do all the great things that we want to do. And even just a little bit of planning. I was talking to a friend the other day that is in Puerto Rico that I didn't even know this. So you're always learning that they have special laws in Puerto Rico that you can kind of end up paying no taxes if you're a crypto investor, because if you move to Puerto Rico, make certain investments there, you end up paying nothing on your gains. That's even more. So you can always be learning about all the tricks that you can do.
Oh my gosh, that is pretty wild. Okay, I want to hit on a few different things you said there, and then we'll kind of move into a different section. But so you say, when I take my cryptocurrency tokens and I buy, let's say I buy a coffee at a coffee shop, and I use my cryptocurrency to do that. Now, typically what happens when I take my dollar bill or my Federal Reserve note and I take it to the coffee shop, I pay a sales tax on that.
Correct.
How does that work with a cryptocurrency? Let's say I take some Ethereum and I go buy my coffee with Ethereum. What is the tax percentage? Do you know? Or is that just something kind of, out there? Like, how does the IRS know to tax me in that sale?
Well, there's different types of tax, first of all.
Okay.
There's actually at least 18 type of tax that they do. Income tax is usually, we're all familiar. Sales tax, that's at the local level. That's the state. That's not the IRS that deals with it. So they still have to collect your sales tax. So that's separate. But for the IRS, how they will know, or even just sales tax, is that now they are required, all those exchange, they are required to report to the IRS all the transactions. Just like how you get, if you now it's good, I guess. Before, now there's a new law that they didn't make it into. It was supposed to come into effect this year, but they postponed it. Where if you get more than $600 in Venmo, PayPal, and all that, you're supposed to get a 1099, right? It's similar to your W-2. Just says, I got this much money, right? So they use all that when you make your bank. If you make your little interest that you get in the bank, and even if it's $1, they send a 1099 saying you made $1. But all those documents, they have to send a copy to the IRS. So that's how the IRS will find out all about that. And let's go back to the example of stocks, because I think most people are familiar with that, since that's been around for most of our life, all of our life actually, is that you'll get a statement that says you sold this, and that's what they'll be getting. And you have to tie it in to like when you bought it to when you sold it. So, and now there's softwares, because this is becoming so problematic for people to do their tax return, that now there's softwares that help you tie in those, because that's how you find out how much you made, because you may buy cryptocurrency or different tokens at different times in the year. So how that's where it also becomes like, how do you tie it in all together? And how do you figure out what the actual gain is, or maybe you have a loss on that?
I could see that would be very, very messy, especially for a lot of people, because one of the investment strategies I tell a lot of listeners is, first off, this is not investment advice. I'm just educating. We're just having a conversation. But one of the things a lot of people will do is dollar cost average. So you are making a lot of small purchases throughout the year at different price points and things like that. So I imagine it could be very problematic. And thank God for software that helps in that situation. However, what happens if people are not utilizing an exchange for a purchase? Say I take my own hot wallet or my own cold wallet. Let's just take Ledger, for example. Ledger is a really well-known cold wallet that people can store their cryptocurrencies on. If I take my ledger and I take it to that same coffee shop and I make that coffee purchase, will the ledger submit documentation to the IRS? I'm not trying to do tax invasion. I don't want to give off that idea,
no,
but
no, no.
I just want to kind of understand, like, how do we
And
work this?
any company, any exchange, any of those that are based in the US, they will be required to submit documentation to the IRS.
Okay.
And actually, in the bill that was passed less than a year ago, where they gave all this funding to the IRS.
Yeah.
And I know that they passed a bill in the Congress that to take away that funding from the IRS.
Mhm.
Most likely won't pass in the Senate, and the president's not going to sign it. So you're stuck with the IRS having this massive funding. So it is what it is.
Yeah.
But they actually put in the bill, which most people know, what they are going to use that money for. And one of the things that they're going to use it for is to bring people in compliance for digital assets.
Wow.
So they already are. So maybe not this year. They're not going to figure out how they're going to catch you, quote unquote, or how they're going to make you come into compliance. But they will eventually. Is they're going to have all this massive funding, and one of their big projects is going to be this. Like I don't remember, like about 10 years ago, their big project for the IRS was foreign accounts. There was this big thing in 60 Minutes, and there was the whistleblower from the Swiss bank that says a lot of Americans have money abroad and they don't report it. And they just use a credit card and they pay for all their stuff when they're abroad, and they pay taxes that way.
Yeah.
And that was their pet project. And the IRS did all these things. I even have a friend that used to work for DOJ, and he one time had to fly there to get all the documents. I mean, it's crazy. So that was their pet project. They got a lot of money through that, right?
Oh my
and
God.
I see the same pattern. I see it with crypto. Probably that's why I also got interested, because I see the same little pattern happening.
Right.
They start little here by there. So this is, I think, is going to be their next big project, digital assets, and figuring how they can make sure that taxpayers are paying for any gain, because as U.S. citizens, we get the benefit of paying taxes on our worldwide income.
Right.
Anything in the whole world. So
yeah. I don't know if that's a blessing or a curse.
I don't know.
It might be both. Who knows? Blessing about being in the United States, but then also a curse because it will track you down. It will get you in some way or another. Wow, that is pretty interesting. And with that being said, you did talk about the whole, coming at you with the 1099 for any like over $600 in Venmo or PayPal. So I imagine that is also going to come down in the works that, if you and I are transacting in crypto, you're babysitting my child or I'm babysitting your child and I'm just paying you in crypto and we're transferring back and forth, there's going to be no tax on that right now. Correct?
Yeah.
Right. But then
or they may not see it now, but eventually, and even I've been in conference where even his DOJ has this crazy algorithms in bank accounts so that they catch that money that's not being recorded as income. And that was a while ago. So I'm sure the algorithms are even better. So they're just, and they, like we use technology to make our life easier. The IRS now is getting a lot of funding because I guess one of the good things, good or bad, I guess the IRS is very archaic. They still have a lot. Their systems are still very out of date. I mean, you can't even you can e-file a tax return, but that's it. You can't send anything electronic to the IRS, anything else like other documents. So they're getting better at that, but that means they're investing in their computers and their algorithms to get better at catching people. And once more, I've been doing this for 20 years. And I think out of that, I only had one client that actually was evading taxes. I think the rest of the time is just people don't know. That's why I say knowledge is power, because you just made a mistake. You don't mean to make a mistake. You don't mean not to pay your taxes or anything like that. You just don't know that you have to.
Right. Yeah, it is true. I do. I have, like I had shared with you before we hit record, my prior background, before going into healthcare, I am a practitioner now, but was accounting. And so we would, prepare the books and do all this stuff to be sent out to, the CPAs and the tax accountants and those kind of guys that were preparing the tax returns. And there were sometimes they were coming back and what about this? You have this money in this bucket. This needs to be allocated to something else. And it was just a simple mistake. It wasn't anything like where like cooking the books or trying to like mess with things. And I do believe that the average investor, somebody who's, just taking some of their funds, and dollar cost averaging, whether it be into stocks, traditional stocks on the stock market, or into crypto, aren't trying to turn around and not pay their taxes. But I also think it's important, like you said, knowledge is power, to understand what is a taxable event. So this conversation with you taught me that a taxable event is using my cryptocurrency at a coffee shop, and a taxable event is taking Bitcoin and transferring it to Ethereum. That's a taxable event.
Correct.
And so knowing those things, you can be a little bit more proactive in how you choose to utilize your different assets.
And also it could be a tax benefit, because if you had a bad investment year or a bad month, you may have losses that you can figure how to use them to cover up for some of your gains. So it's not always works toward the benefit of the IRS having that knowledge. It works to your benefit too, how to reduce your tax. Maybe you had a bad year, but that can go against some of your other investments that did well. It's all averages.
It's interesting because more recently, with the economy, the state of the economy, and people talking about, the like stock market being down and everything, I know that there's a lot of really astute business people who are doing what is called tax loss harvesting. Is that kind of what you're talking about, where you're taking the loss to help offset, any of the gains that you had in the prior year, so that your tax, what you owe or what you don't owe, is less.
Yeah, and because the IRS still hasn't caught up with a lot of things, it's really hard to do that with stocks. There's a lot of rules that prevent you to do a lot of that, like that you sell and then you buy it, so that you create a loss. But in crypto, they still haven't issued regulations yet about it. Last time I checked, so there's still a little bit more playing room, more tax planning to do with cryptocurrency and all that.
Wow, that's okay. I'm learning too.
But I think they're going to start putting regulations soon, though. So,
well, now. I do agree with you. I do believe that regulations are coming. Especially with the current state of the entire crypto space and so many like things falling apart and imploding. I won't get into a deep rabbit hole, but part of it for me feels like it's also a big, huge governmental play to get their central bank digital currency out in the marketplace, and a lot, people feeling a lot more comfortable with that than utilizing Bitcoin. And I don't know that I don't see a lot of positives with the CBDCs, but that's my own personal thought process around that. But changing gears, moving on. You did mention earlier about they changed the term this year from virtual currency to the term digital assets. And I know that a big part of that was because NFTs aren't really considered a cryptocurrency. They are a digital asset. It's a piece of artwork or a piece of like a property right, or, just having a digital tag on something you own in the physical state. So I guess I'm having a hard time understanding. I guess it would be in the same way that they're taxing cryptocurrencies, but how would they be taxing, like, if I owned a piece of digital real estate in the metaverse, am I also paying property taxes in the metaverse on that property that I own?
They haven't gotten the state that will be a state issue, and it will be interesting to see if they actually the states get that far to say that they have a nexus with that. I never thought about that, but that would be interesting, and I could see the states trying to do that, especially states that are losing money when a lot of people move from there, like New York and I know California are losing money they have big income, so they're having deficits. So it will be interesting to see if they do something like that. But for the IRS, if you think about it, like let's say NFT is an artwork, right? So if you think about it, if you had an artwork and you pay for something with a valuable piece of artwork, that's a taxable exchange. So that's why they're opening the because you can actually I can take my, I don't know, I can take this, I can take my pencil, right? And I can tell you, you're gonna give me some, because as a barter, right? We're bartering for things. You're gonna give me medical, and I'm gonna give you my pencil. Obviously, your advice is worth more than my pencil, my pen. But that's the concept, that we're exchanging something for something, right? And it will be, so that's why they're bringing the concept of bartering, because a lot of people also don't think about when they barter, they exchange things. But that's taxable. And that they're trying to also go into the gig economy and all that, because a lot of in the gig economy, freelancers, they use digital currency, Bitcoin, they use digital currency, they may exchange NFT, they don't report it because they don't think about it. You know, when you exchange, you don't think about it, it's not cash.
Right.
But it is under a tax law, a taxable event that triggers tax. Maybe not.
Well, I guess then would it go back to the whole, because like if I bought, let's say I bought the Mona Lisa, I'm going to pay sales tax on that purchase of the Mona Lisa, like physically buying that piece of art. When I go in and purchase an NFT, let's say I purchase a Bored Ape and I, use my cryptocurrency for that purchase, there's not a sales tax transaction on that currently.
Because you're getting it confused.
Okay.
Income tax is the IRS.
Right.
That's federal.
Right.
But the sales tax is the local. There's either a sales or a use tax, and that's at the local level, at the states, at the cities.
Right.
So I just think you're not paying a sales tax there, because the cities are like, it was only until recently that they started states saying, oh, whenever you buy something in Amazon, even though you're buying it online, you have to pay a tax. And the reason why they're getting, for instance, let's go, because that's where it started, where you have to pay taxes when you buy an Amazon, is because Amazon decided to open a warehouse in that state. So that's how they got the nexus. So if you're still in the cloud, there's still no good tax law that says that they have because they have to have a connection, the state, to tax you for the sales tax.
Well, then sorry.
Okay. So there has to be a connection. Maybe if wherever is being sold, if it's headquartered in that state, maybe they'll get a connection to do the sales tax. I haven't seen, and it hasn't popped in my radar of any sales tax for NFTs, but that doesn't mean it's not in the woodworks. The people that they're in these states, they're looking how to do that.
So I guess you're right. Like I am connecting two different sales taxes, state, income tax or tax in general, like bigger tax is the IRS. When I purchased that Mona Lisa, the IRS is not getting any tax from me for that purchase.
No, but they may get a tax from the buyer for that purchase if they made a gain.
Oh,
like maybe that's where.
Okay.
Yeah.
Okay.
So whoever
disconnect. Yeah. So on the seller side, they would get okay. That's
from the seller.
that doesn't make sense on NFTs. But they would only pretty much get their tax on the sale of that NFT. So if I sold you a Bored Ape, I will pay taxes on that gain. Like if I bought it for $500 and I sold it to you for $1,000, I'm getting taxed on that $500 gain.
Correct. Okay. Or if you created it, then you're paying tax on more than probably the whole $1,000, unless you can show what your cost for creating that is.
So would that also be the case then because when people create NFTs and then I create one and I sell it to you, and then you go ahead and you sell it to your cousin, I get like whatever my royalty rate is, right? Let's just easy 10%. So you sell it to your cousin for double the price you bought it from me. So I get 10% of that sale price. Then I pay taxes on that 10% also.
Yes, because it's income. It's like royalties in a book, right?
Yeah, that's true. That's true. Okay, I got all the dots connected in my mind. Thank you, Claudia. That was very helpful because I definitely was going California versus the entire United States when I was getting confused with that. So,
but I said, I wouldn't be surprised that they get they just have to make a connection, because a big rule in state tax It's
Yeah.
the connection, the nexus. And
Right.
like for Amazon, and actually the history of Amazon picked to their headquarters in Washington because it was one of the few states with no income tax, none of those. But once
Right.
and they used to fight internet,
Yeah.
like any sales tax on internet sales for the longest time.
Yeah.
But once they realized that they needed those warehouses to deliver fastest, they stopped
Yeah.
fighting it. And now, because of the warehouses, which makes them deliver faster, you and I have to pay sales tax.
Sales tax. Got
Mhm.
it.
Mhm.
Yeah. Yeah, makes sense because then they have a physical location in that state, so they have to collect. Like I'm here in California, so they have to collect this California sales tax,
Yes.
which I do see every time I make an Amazon purchase.
Or I'm in Florida and I have to pay it too
Right,
because they have warehouses here everywhere.
right, yeah, yeah. I guess they at that point with Amazon, they're everywhere. You're gonna pay
Yeah.
it in every state, so.
Yeah.
Yeah, very oh my god, this has been such a fun conversation. Is there anything I didn't ask you about tax law that might be good for the listeners to at least have an understanding or knowledge about?
Well, like I said, the big thing is because the IRS is putting a lot of funding into this particular the digital assets. I think the big thing is obviously have your understanding, but have good records because
Mm,
they are going to deploy audits,
mm,
more revenue agents for this. There will be more audits on this,
right.
and if you have good records that you can tie it in when you buy it, when you sold it, you have good. And like I said, now with software, it's so much easier. Have
Mhm.
good records, have of everything. If you by accident, if you get caught in an audit, it's okay because you have the records to show it's okay. And I done audits where you was back to zero, the zero amount. Oh, because sometimes the IRS may not have the best of records themselves. But if you
Yeah.
have good records, sorry, if you have good records and you can show that everything that and then if you keep up with like I said, good records, and always if you get any letter, the other big thing, if you get any letters from the IRS, open them because I know a lot of people. No, it's funny, but I have clients that come with like a stack of letters that they have not opened, and they miss their own protections because we have rights as taxpayers. We have a bill of rights. It's
Yeah.
like we have a bill of rights in the Constitution. With the IRS, we have a bill of rights of 10 rights that we have, and you're going to lose some of those appeal rights, whatever, to tell them that you need to. So don't get afraid. I understand it's scary. You know, when
Yeah.
I got in them myself letters, and even though I've been doing this for 20 plus years, I had to admit when I saw one letter, I paused for a second before I realized that I could fix this easily. So it's
Yeah.
okay.
Oh my gosh.
So
So
I
even the
understand.
tax attorney, it's she's taking her own advice as well. So
Yeah. So open that
And if
letter.
people keep really good records, if in the event of an audit, they make your life so much easier as well that you're able to just be able to go through everything and get them through it.
Yeah.
So,
And for them too is I think how
yeah,
the battle is the anxiety that you get in this scary. It's scary,
totally.
they're a scary entity for better for worse for people. So
Yeah, yeah.
mhm.
Awesome, Claudia. I know you have something for our listeners today. And then let everybody know about that. I'll also link it in the show notes and then how they can stay in touch with you and stay connected and reach out to you if they need you.
Yes, we have a free guide, www.freeauditguide.com, and in there you can get I believe it's 24 tips that I give that we use in both our audits and our clients to prevent it. And there's some particular to crypto, so in particular, so that just to help you, just because once more, I'm a true believer that knowledge is power. So that's why I appreciate you giving me your time and your space to give this information, because if we have the knowledge, then we can avoid a lot of the headaches. And if you go once more to www.freeauditguy.com, you can get in there. And also you can sign up to our newsletter from my firm. And we send out just to let you know what's going on and just to give you advice. I'm a teacher at the end of the day too, so I love to teach everybody and just knowledge. So that's about it.
Definitely. I love that so much. Thank you so much for spending some time with us here today and sharing your wealth of knowledge around the topic of tax and laws and crypto and how we can all stay safe and well financially. So, Really appreciate that, Claudia. Thank you so, so much. And for those of you on this ride with us, we're pulling into the station, and I'll have you exit to the right. See you on the next one. You made it. Congratulations. That wasn't so bad, was it? I hope you laughed and learned a little bit more about this Web3 universe and how simple and fun it can really be. Would you be so kind as to leave us a review and share it with your friends and family? It would mean so much to get this out to more people as we embark on the greatest transfer of wealth that has ever happened in human history. Can't wait to see you on the next one.